China doubling down on economic recovery, but perhaps not the type investors were looking for. President Xi Jinping and other leaders pledged to focus on industrial policy come the new year. There had been hopes of a renewed focus on boosting domestic demand, while several China-based stocks leading the sell-off in Asia today, including developers, Longfor Group, and China's Overseas Land and Investment. For more on what to expect in 2024, we're joined by Leland Miller. He's China Beige book co-founder and CEO. Leland, it's great to see you here. So it looks like at least China, Xi Jinping, confident in the recovery, what that looks like heading into 2024. Investors, though, did not get the message, did not get the headlines that they were hoping to get here from the government. How do you see this initiative here shaping, or lack thereof, China's recovery as we look ahead to the new year?
Well, my big question is where these investors are getting their expectations from, because it's been very clear in 2021, then 2022, then 2023, and now going into 2024, that China's economic growth model has evolved, that there's a completely different stimulus playbook right now, and that Xi Jinping has no interest in using big bang stimulus in order to juice investor returns, in order to surge the stock market, in order to bring back artificially high levels of growth. And so the idea that every 3 months investors are disappointed by this sort of begs the question, why are they not smarter at this point? So I think the expectations right now should be very close to what they've been in the past, which is Beijing will do enough to make sure that the growth doesn't fall off too much. There will be a fiscal push in 2024, just like there was a monetary push in 2023, but the expectations should be tamed in terms of what they are going for. They want to make sure they stabilize the economy, not juice it.
Earlier in the show, our own Jared Blickery had mentioned that China has decoupled from the rest of the world, as he was taking a look at some of the movers earlier this morning here. Does this seem like a China that wants to recouple, that wants to reinitiate conversations and deal making with the rest of the world from your perspective?
Well, the word decoupling is used in a lot of different ways. And if you look at broad decoupling, China hasn't decoupled from the rest of the world. Just look at the trade deficit, trade surplus that China runs with everyone, including the United States. Look, in specific sectors, there is decoupling. If you look at technology, there is an effort right now to decouple, the U.S. and Chinese economies, for instance. But, decoupling is overused. It's still two very interwoven economies. The problem is that China keeps pushing forth domestic policies that make foreign investors squeamish. They don't want to go to China and be arrested. They don't want to have problems with their, with where they store their data. They don't want to have problems, with political crackdowns and other things. So the domestic environment for investing is not very good right now, and so Xi Jinping is having a hard time bringing in more investment.
Yeah, Leland, to that point, we had some headlines here this week that the U.S. is in talks with NVIDIA about allowing some sales of some of their AI chips to China. In terms of the trade war that's been going on, the chip war that's been going on between the U.S. and China, has that at all been effective in terms of your checks and what you're seeing on the ground in China?
No, not at all. It's not a serious, it's a pillow fight, not a chip war. I mean, if you look at what happens right now, all the chip makers basically live at the White House pushing for the regulations to be eased and eased and eased. The reality is that there is not broad ban on, sending advanced technology to China. The headlines say there is, but you don't have broad prohibitions for the most part on sending this technology. What you have is a licensing regime. The Department of Commerce evaluates those licenses behind closed doors and overwhelmingly approves these licenses. These are for foreign firms. These are for Chinese firms. These are for U.S. and foreign firms selling to the Chinese market. Most of this continues to go on. So there is not this wall that being set up, in which case, U.S. technology and Western technology is not flowing to China. There are Swiss cheese holes in it, and right now chip makers are driving cars through them.
Leland, administration over administration, there's still continued to be this tough on China type of mindset that has essentially been passed on or tried to be shown to the American people. But at the end of the day as well, if we were to see, and we're seemingly going to get in 2024 general election, a rematch of President Trump versus former President, or President Biden versus former President Trump, at the end of the day, would a Trump presidency then have us reverting to even tougher kind of relationships with China and some of the other counterparts?
Well, I think in some ways, obviously, President Trump was much more focused on trade. It's true that President Biden mostly inherited what Trump put forward, but I think you'd see much more, and you will see as the campaigns ramp up, much more talk of trade issues and tariffs. The issue here is that there's so much focus on the trade aspects of the relationship and so little focus on other aspects, whether it's export controls, whether it's investment flows, from the United States into China. The risk is that the trade issue eclipses everything else, and that's all we talk about, instead of really walking through the issues one by one and establishing a priority list for getting the relationship right.
Leland, do you have any hope that the relationship is going to improve? And I guess when you take a look at what that relationship could look like in a longer term view, 5, 10 years down the road, obviously very far out in the future, but how do you see the policies of the last several months kind of shaping that relationship going forward?
I think that we are in a position in which the relationship's going to continue to deteriorate. That doesn't mean it needs to crater. If U.S. policymakers are smart, they will adopt a priority list of things that are really important for national security purposes to get right with China. And we are not getting those things right now. If you get a priority list, then that means you don't have to throw every single policy against the wall like a bowl of spaghetti and try to hit China on everything at all times. What you want to have is smart policy that's focused on national security needs. And then you can have a reasonable commercial relationship with the country beyond that. But what really needs to happen right now is policymakers need to get their ducks in order and get a priority list of what needs to happen over the next year or 2 or 3. And I think that would do a lot to settle the relationship and make it a smarter one.
Social media in the form of TikTok, smartphones, generative AI chips. What is the next kind of product shoe to drop here in its U.S.-China kind of tit-for-tat relationship battle?
I'm not confident anything's going to happen in 2024. The Biden administration seems to not want to push anything. Congress is, toying with stuff behind the scenes, but you saw every single China-related provision in the NDAA fail earlier this month. So it's not clear at all there's another shoe to drop anytime soon. I think that they will be looking closer in the new year at outbound investment because, you originally had a conversation in which, there was going to be a regime, sort of a reverse CFIUS. That got narrowed down. What's on the books right now is completely useless. So I think that there's a look again at how to do that right. But 2024, it's going to be a lot of loud talk. It's not at all clear there's going to be a lot of action.